CommSec, Tom Piotrowski with a look at the numbers today. How are we shaping up this morning, Tom?
Well, Pete, well in a fashion, I suppose, broadly. A little bit disappointing in that the futures are pointing to only a small improvement for the local share market when we have seen some rather significant gains for Northern Hemisphere markets. The seminal event, of course, of the last 24 hours has been that mid-morning local time yesterday. We saw a truce being announced in relation to the hostilities between Iran and Israel, and that was important for the markets. We continue to see downward pressure on oil prices, Pete. From the peaks that we spoke about early Monday morning around this time, we have seen oil prices fall by close to 18% from their trough to their peak. So that's a very significant outcome at a time when the markets were worried that higher energy prices would cripple the global economy. So that has been an important vector for the relief that we have seen for global stock markets. It's also translated to a meaningful drop in interest rates as well, where long and short-term interest rates are concerned, Pete. So last night we actually heard from the US Federal Reserve Chairman in the first of two congressional testimonies over the course of the next 2 days. And he was a little more pragmatic in relation to the pathway for a rate cut next month, which we haven't really heard from him in those terms. And that was also another factor helping interest rates fall. So those factors alone were the reason that you had the NASDAQ last night up by 1.6%, the S&P 500 up 1.2%, with a similar outcome for the Dow Jones. European markets higher across the board as well. You saw meaningful gains in the order of about 1.6% for the German index, the French market up by about 1%. NATO leaders met in The Hague last night, which undoubtedly you're covering, and the important event there being that they're going to increase their spending quite significantly over the course of the next 10 years when it comes to military spending, and that was a factor that was actually pushing European interest rates a little bit higher rather than lower. So having said all of that, we're only, as I said, expecting a small gain at the start of trade today. We've got monthly inflation numbers to look at, and a moderation in the monthly pace of inflation is expected from 2.4 to 2.3%. You could argue that this is less of a vector at the moment, given the fact that the markets are almost 80% certain that the RBA will be cutting rates in July. So it'd take a pretty rogue number today to dislodge that thinking.
Okay, Tom Piotrowski, thank you.